Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, March 21st, 2012 is sponsored by Realtik. All right, let's get right into the mix here, folks. Markets are trading flat on the day. We had a little bit of whipsaw earlier in the day, but nonetheless, light volume has taken over and we've floated. And you can see that early in the day, a little bit of downside. We floated, came in down here, made a low of the day on the SPY around the 139.92 level. And since then, we've rallied about 50 to 60 cents off those lows and are hovering just underneath the highs of the day. In fact, if I take a pivot high right here and just draw it across, you're going to get a good little triangular pattern. The tip connected right through there is resistance, and then if I zoom out a little bit, you can clearly see there's a lower major support point from this pivot on the 13th of March to the pivot yesterday, the low yesterday, and then the low of today, and they match up absolutely to the penny on this trend line. So that's your low end trend line support. If we come back down later today, that will be support. And right now you are hitting on resistance right up here, trying to break to the upside. Now, based on the volume, which again is 81 million as we close in on 2:30 p.m. Eastern time with just an hour and a half left in trading, this market again continues to show us that in light volume environments, when the dollar is slightly on the weaker side, the markets will want to float neutral to higher. And again, it's more so a volume issue than anything, because what we see is when volume is heavier early in the day, the markets tend to go lower, like we could see it very clearly right here. And even yesterday, look at yesterday. Early in the day, we were down. As volume declined midday into the early afternoon, we floated back up. And then you had a little bit of a sell-off late in the day as the volume increased again. And again, you could clearly see the volume action today. I mean, look at that. You can't get much more declining volume than on this current chart today on the SPY. Now remember, the SPY mirrors the S&P 500. That's how you want to track it. And again, looking at the charts, this is exactly what we're seeing. We're kind of seeing this choppy, but generally trending upward market right now, as the spiders now are up about 5 cents on the day, just into that line. By the way, if you take out this little green line right here that I just put in, you're going to head to the high of the day, which will be resistance, and then the blue trend line. Blue trend line will be your next major spot. All right, what's being the control on this market? What's giving this market a bias to the upside? And easily, technology we can clearly see is leading this market today. The Nasdaq's up about 13 points, or 0.4%, while the Dow and the S&P are basically flat to negative. All right, Dow is down 22 points, S&P's up 25 cents, while the Nasdaq remains up about 12 to 13. And the leader here in the Nasdaq is very clear. It's Google, GOOG, up $11.50 on the day. Now, the interesting thing about this on the daily chart is you actually have surpassed this pivot high on Google, which was gap fill, and you're now making your way to your next point of interest, which is right here. And actually, I really do like a level here, which is gap fill on Google at around the 650 to 651 level. If we were to get to 651, I would think this is a no-brainer short with a stop on a closing basis above this pivot high right up here. All right, so I'll be watching this chart very closely. And what's amazing about the Google chart is earnings were just ugly on Google in January. The stock gaps down and goes down to the 200 on those earnings. Now, it's not like Google has any good news on earnings since then, but because the market has been so parabolic, it has floated all the way up and has eclipsed that drop on earnings at this point. And that's when you start to know the stock itself is getting a little extended. But again, I don't think I'd mess around with it until we get to the gap fill here. At least wait for gap fill since we're so close at this point, around the 650 to 651 level. Another stock, as we all assume, is Apple. Apple's up about $3 on the day. Percentage-wise, that's not a big move. I mean, in all fairness, that's about 0.5%, little less than 0.5% on Apple. But it's just the nature of Apple having so much power over the Nasdaq, over the Qs, over the S&P 500 in percentage weighting, that makes this a good thing for the markets. It's very, very hard for the market to fall when Apple's neutral to higher. And that coincides with the financials. And that's one thing I said to my members this morning. I said, listen, the way this market's going to really come down is if you have the financials falling and Apple at the same time falling. Those are the keys to the market, financials and Apple. That's all you need to know. You get those to fall, and this market will fall. As long as one of them's up, markets are probably around the flat line. If both of them are up, markets should be neutral to positive. Interestingly enough, we have JPM down, Goldman Sachs down today, but Apple positive. What is the S&P doing? It's flat. And again, you have one negative, one positive equals a flat. If the financials turn around and start going higher, then you're going to see the market take off to the upside as long as Apple stays up. See what I'm getting at right there? All right. So Google and Apple are positive for tech. Microsoft's flat, Intel's flat. So a lot of the other players are just on the flat line. Oracle had earnings yesterday after the bell, which was very decent. They were decent earnings. It was interesting because the stock gapped up today, but has actually come all the way back in right into this area. So kind of a poor showing on Oracle after earnings yesterday. The stock again having a good gap up, but just could not hold it at all. Let's take a look at JP Morgan's chart here. Again, JP Morgan has gone parabolic lately, but is stalling out down 18 cents. 18 cents is not a big drop by any stretch. It's well off the lows. If we go to your intraday chart, you can see very clearly you had the low here early in the morning, mid-morning session, and you floated off of that as of now. All right, it is coming in a little bit, but we'll have to track the SPY and see if that has much of an impact. Let me just take a look at the SPY again on an intraday basis. You can see it's stalling right underneath that green trend line. But again, interestingly enough, notice how you're stalling under the green trend line here, but you're above all three moving averages, which leads me to believe unless you can confirm back below these moving averages, you're not going to head back to the lows, and it's more likely, based on the volume condition of this market, that you see some upside in the not-too-distant future. All right? All right, so that's what we're seeing there. The dollar again is on the flattish side today. Volume is light. We're seeing we're seeing Chevron and Exxon both selling off a little bit today. But again, it's a flattish market with some positives, some negatives out there. The volume is probably the most positive thing. Bernanke and Geithner were on Capitol Hill today testifying, which anytime they testify, markets will almost never fall, in my opinion, as they always have their hand on the trigger button for buy programs to not allow the market to collapse while they're on TV and talking. All right, another stock that's falling today is First Solar. First Solar, nice drop on that. It's finally coming into that double bottom level down here. I think it's going even lower, though. I'm telling you right now, folks, within a month, you'll probably see this at around $20 to $21, possibly even a little bit lower. So, as cheap as it does seem now after being $180 last year, if we go back to 2011, 170, 180 bucks, I still think there's some downside here, probably going underneath 20. Once it gets under 20, I think it actually may be a little bit of a decent play at that point. All right. Let's see what else we have here. Taser was one stock I played today with the chat room in the early morning session. They had some good contracts announced today, one with the Army. That was a buy right at the open at around $4.12, $4.10, right in there. It popped to about $4.25 right away on the open. Some members made some good money there. And there were some other good scalps in the intraday stock chat, which is always nice to see. Let's take a look at gold today. Gold is bouncing back a little bit, although it's off its highs. Yesterday we had a nice drop in gold. Today a little bit of a pop in gold, and it looks like you're still consolidating. This is still a very bearish chart, folks. As long as you're going sideways, kind of inside of this arena here, you have to look at this as a bearish consolidation pattern, especially with a golden cross of the 20 crossing the 50. Soon that 20 will cross the 200 as well to the downside. My guess is it has a few more sideways action days, and then you'll have a big fall on gold again. Very possible that that coincides with a little bit of a market dip here as well. All right, looking at the SPY on the daily chart, you can just see how extended the move has been. I mean, if we go back to October lows, you were at 107 to 108. You're now at 140. And believe it or not, the markets are within 10% of the all-time highs on the S&P, which is absolutely amazing from 2007, those highs. Considering unemployment was 4% then, you had the housing bubble, and people were just, rocking left and right. To think that the markets are that close to their highs is a pretty spectacular thought. The only difference is, again, the dollar is about 10 to 15% weaker. Therefore, in real terms, you're a little further away from that all-time high if you take into calculation the dollar. All right, but nonetheless, it is amazing considering where unemployment is right now and consumer spending comparatively to back then. All right, looking at a couple other stocks today, folks. Let's just take a look at Caterpillar. Caterpillar's down $1.56. I still have this as a short. What I love about Caterpillar is that it's breaking through the 200 today. I'd like to see confirmation in the next day or so, but my short on this should be a beautiful thing. In addition, I'm still short on IBM as well as a few other things. I'm still in the money on IBM nicely. IBM's bouncing a little bit today, but just up 65 cents, which is minor in my opinion. For the most part, I think this was your top on IBM for a longer period. I don't expect IBM to go higher than that level. At least in the next month or so. And I do think you're going to see a pullback sharply here to about the 20 moving average on the daily chart. All right. Any other stocks I want to talk about? I think that's about it right now. Just scanning through my watch list, I see Amazon's down a little bit after that ginormous move yesterday. 3M is down slightly. Hewlett-Packard continues to see some downside. MasterCard's up a little bit. Visa's up a little bit. And just kind of scanning through. But I think that's about it for today, folks. Bottom line is, in the money stocks, 7-day free trial. Now, Research Center is geared towards swing traders. Again, that's the Research Center at InTheMoneyStocks.com. If you're a swing trader or investor, that's where you want to be. If you're an intraday trader, if you want intraday analysis, if you want to talk to me live by asking questions, which I will answer live on a microphone, you'll view my live charts, everything like that, then the intraday stock chat is for you. There's, again, a 7-day free trial of both for you to take. Alrighty, guys, have a great afternoon, great evening. Let's see where this market ends up today and where it goes tomorrow. Take care.